You know, when I was out there speaking on silver worldwide back in those years, silver went from, the $5 level all the way back up to 50 temporarily or close to it. And the gold silver ratio got down to 33 to 1. Now the gold silver ratio is like 85. Silver at, round numbers 30 and gold at 2,700. So if I had to take that statement back, which I can't, I'd say that gold preserves your wealth and so does silver. And that's about all it's done. And the only way I could see it really outperforming silver in the near future is a panic buy into silver, because there's a perception we're running out. So these deficits continue. One industry like Apple Computer doesn't have enough for the iPhone, and all of a sudden they go to their logistics department and they say, hey, order us, however many tons of silver we need for the next 3 months. And they say, hey, we just got a call from whatever metals dealer they're using. They don't have it. They can't get it to us for 3 weeks. So now Apple has to put their iPhone on hold. I'm just making up an ace, but something like that would take place. I think we might see 40 this year. Of course, that's barring a black swan hitting a black swan where we could go crazy. But I do think that we're going to have a hard time getting over the 33 high that we saw last year. And once we do that, then we'll probably continue higher. I did say we would consolidate, and we kind of, what they do say in the commodities business, consolidate the gains. We've already seen both gold and silver up roughly 30% year over year last year. And so it's going to take a while to digest that kind of a move. And once we do, then they'll either move up or down, and it's probably going to move up. And it could go soon. It could go not soon. I'm thinking it's going to go between a big trading range, both gold and silver, in a trading range, which they both have been in for some time. I think that will continue for a few. The only caveat I have to that is there's a real stress going on in the exchange for physicals market, the ETF market, where you can exchange a piece of paper and get physical metal. And with the tariffs, that's throwing a wrench into the gears as well, because the silver users that need the product for industrial reason are worried about a tariff. So now they're shipping silver here, there, and everywhere before a possible tariff goes in play, because if there's a tariff added on the silver, obviously that's going to increase the price. So there's a bit of a scramble going on in the silver market right now, and it looks on paper as if we could be in a situation that could go into silver. I'll say it on your show. I mean, I'm saying it's possible, but it is something to watch, because silver can defeat the best. I mean, I've been in this market too long, but it can surprise me, and I know what to look for more than the average person. Not perfectly, but I certainly have got more experience. And with all that said, I wouldn't be shocked if all of a sudden we are at 33, by March 1st, because there's problems getting physical in the silver market. What's ironic is I'm differentiating the silver market, which is the commercial bar 1,000 ounce bar market. That's the silver market, versus the retail market, which is your silver rounds, silver government minted coins, your kilo bars, and your 100-ounce bars. That market's dead, at least in North America. No one is buying silver in the retail market. In fact, the sells are greater than the buys. Talk about irony. The basic silver stacker out there is disgusted, worn out, tired, doesn't want to hear the words, got enough, I want to sell some, I'm waiting for a pop so I can get rid of some. And yet on the silver industrial / big buyers, which buy 1,000-ounce bars for investment, that market's pretty. And I'll own this, because I was the one actually way back when the silver market did really well from the year roughly 2000 and 2011. And I said, gold will preserve your wealth, but silver could, not would, but could make you wealth, meaning that silver will outperform gold. And it did during those years, but it hasn't since. In fact, it's really lagged gold based on the gold-silver ratio.
The silver market is at a critical inflection point, and while many investors have lost patience with its performance over the years, the fundamentals remain stronger than ever. There is a palpable sense of exhaustion among retail investors, people who have stacked silver for years, waiting for the big breakout, only to see the metal languish behind gold and other asset classes. But what they don't realize is that we are potentially on the verge of a major shift, one that could send silver soaring in ways that few are prepared for. The real question is, what will be the catalyst? If we look at historical patterns, silver thrives in inflationary environments and times of economic instability. Gold has proven itself time and time again as a store of value, and while silver has historically followed suit, it has lagged in recent years due to its hybrid role as both a monetary metal and an industrial commodity. However, with global supply deficits growing and demand from industrial sectors increasing, especially in the realm of green energy, solar panels, and electronics. Silver's time to shine may be approaching faster than many anticipate. Looking at the technicals, I wouldn't be surprised to see silver hit $40 this year under normal conditions. But of course, markets rarely follow a linear trajectory. There could be volatility, consolidation, and shakeouts along the way. However, if a black swan event were to strike, whether that be geopolitical tensions, economic instability, or an unexpected supply crisis, we could see silver make an explosive move, breaking past previous highs and into uncharted territory. That being said, in the short term, I expect we'll see a range-bound market, with silver oscillating between key levels before making its next major move. A critical factor in the silver market right now is the exchange for physical, EFP market. This is where paper contracts are converted into physical metal, and we're seeing a growing disconnect between the paper price of silver and the physical market. With new tariffs potentially impacting the flow of metals, industrial users are scrambling to secure supply before additional costs are tacked on. This is creating a bottleneck that could accelerate silver's next leg up. If supply tightens even further, we could see panic buying from industries that rely on silver for manufacturing, pushing prices higher at a pace that will catch most people off guard. It's important to distinguish between the retail and wholesale silver markets. While the retail sector, comprising silver rounds, coins, and small bars, has seen declining demand, the industrial sector, which deals in large 1,000-ounce bars, remains robust. Institutional buyers, manufacturers, and investors acquiring silver at scale are driving demand, even as retail investors remain on the sidelines. This divergence is key. Retail investors are burnt out. They've heard the same bullish arguments for years and are frustrated with silver's inability to break out. Many of them are selling, exiting the market, and turning their attention to assets they perceive as having higher immediate upside potential, such as stocks and cryptocurrencies. But this is precisely the kind of environment that breeds opportunity. When the general public has lost interest, when sentiment is low, and when nobody is talking about silver anymore, that's when smart money starts accumulating. We saw this same pattern play out in the early 2000s when silver was languishing at $5 an ounce. Most investors had written it off, convinced that it would never rise again. And then, within a decade, silver exploded to nearly $50 an ounce, proving just how fast things can change when fundamentals and market conditions align. At the core of silver's story is its role as both an industrial and monetary metal. This duality makes it unique among commodities. Unlike gold, which is primarily held for wealth preservation, silver has tangible use cases in modern technology. It is an essential component in electronics, medical applications, solar panels, and electric vehicles. This means that no matter what happens in the financial markets, there will always be an underlying demand for silver. The challenge right now is that supply is not keeping up. Mine output has been declining, and many silver-producing regions are struggling with logistical and geopolitical challenges that are limiting production. If industrial users suddenly find themselves in a position where they can't source enough silver, we could see a chain reaction. Imagine a company like Apple, which needs silver for its iPhones, discovering that their usual suppliers can't meet demand. What happens next? They panic buy. They start securing as much silver as they can, at any price. And once other manufacturers catch wind of this, they do the same, creating a cascade effect that sends prices soaring.
You know, when I was out there speaking on silver worldwide back in those years, silver went from, the $5 level all the way back up to 50 temporarily or close to it. And the gold silver ratio got down to 33 to 1. Now the gold silver ratio is like 85. Silver at, round numbers 30 and gold at 2,700. So if I had to take that statement back, which I can't, I'd say that gold preserves your wealth and so does silver. And that's about all it's done. And the only way I could see it really outperforming silver in the near future is a panic buy into silver because there's a perception we're running out. So these deficits continue. One industry like Apple Computer doesn't have enough for the iPhone, and all of a sudden they go to their logistics department and they say, hey, order us, however many tons of silver we need for the next 3 months. And they say, hey, we just got a call from whatever metals dealer they're using. They don't have it. They can't get it to us for 3 weeks. So now Apple has to put their iPhone on hold. I'm just making up up an ace, but something like that would take place. You might, if that got sniffed out and other industrial users knew that, they might go ahead and buy more than normal. And then if that caught on to the retail market or the investment community, institutional and retail, then you could see some panic buying. But I think that cryptocurrency world has taken over the silver world. What I mean by that, if you look at one of my favorite books back here, Silver, the Restless Metal, all the data through about 1960 shows if you have high inflation, silver. And I believe that. And it was by historical standard. But now, if we have a hyperinflation or a high inflation, it's probably the crypto. Bots have been around for a while, just not at the sophistication that they are now. And I noticed that early on, that there was a propensity to score silver negatively. And that was another reason I shut down the comments on my, the videos I make. I have control over it. I can say no comments, and when I do, and it's fine to have comments. I just have time to read them. I do interviews with you and others, and some of the others say, David, could you please, come into the comment section and respond to some of these. And I have done that, but, I've got other things to do. But no, you're right. I think that the silver story needs to be suppressed. I mean, the silver story from a monetary aspect and a technology aspect is the hero's journey. I mean, it's the underdog story of all monetary systems and technology, because without silver, nothing happens. So if we, the people, globally, not the U.S., not Canada, everyone understood the significance of silver value, not its price, and were able to grab 1 ounce per person, we would have a great deal of power, because it'd be like holding all the oil in private hand. Without oil, nothing moves. You can't have anything move without the oil sector. So in the metal sector, silver's that powerful, but they don't want that word out.
The financial system, as it stands today, is in a fragile state, with the mounting debt crisis and currency devaluation looming over every major economy. Investors and governments alike are coming to terms with the reality that fiat currencies, particularly those in the Western world, are losing their purchasing power at an accelerated rate. This shift has driven renewed interest in hard assets like gold and silver, which have historically served as safe haven investments during times of economic uncertainty. While central banks, particularly those in the BRICS nations, continue to accumulate gold at record levels, the broader public remains largely unaware of what this signals: the beginning of a new monetary paradigm, one that will see gold and silver reclaim their historical roles as the foundation of global trade and finance. The BRICS alliance, comprised of Brazil, Russia, India, China, and South Africa, is already laying the groundwork for a gold-backed trade system, which will eventually challenge the US dollar's dominance. This initiative has been met with skepticism in the West, but the increasing accumulation of gold by these nations tells a different story. China and Russia in particular have been leading the charge, both openly and covertly amassing large gold reserves while simultaneously reducing their exposure to US treasuries. This de-dollarization movement is not just a political maneuver, but a strategic necessity to insulate themselves from Western sanctions and financial manipulation. The West's failure to recognize the shifting tides is evident in its continued reliance on debt-driven economic growth. The United States, for example, is now facing a debt burden that is mathematically impossible to repay without significant inflation or outright default. The Federal Reserve's monetary policies, particularly the practice of quantitative easing, QE, and artificially suppressed interest rates, have only exacerbated the problem. As the bond markets begin to crack under the weight of rising yields, a flight to safety is inevitable. The question is, where will investors turn when the very foundation of the financial system, the US dollar, is no longer a viable store of value? For decades, people have been conditioned to trust in fiat currencies, despite overwhelming evidence that they are inherently flawed. Governments have a long history of devaluing their own currencies to finance wars, social programs, and other initiatives that require funding beyond their means. This debasement, though gradual, has had profound effects on the purchasing power of ordinary citizens. Take, for example, the US dollar, which has lost over 98% of its purchasing power since the Federal Reserve was established in 1913. Inflation, despite being downplayed in official government statistics, is far higher than reported. Anyone who shops for groceries, pays rent, or manages household expenses can attest to this fact. Gold, on the other hand, has maintained its purchasing power for centuries. A single ounce of gold in Roman times could buy a high-quality toga, a leather belt, and sandals, the equivalent of a modern-day suit, belt, and shoes. This consistency over millennia is why gold is viewed as real money, while fiat currencies come and go. The manipulation of gold prices through paper gold markets, such as those run by the London Bullion Market Association, LBMA, and COMEX, has suppressed its true value for years. However, as physical gold demand surges, particularly from Eastern nations, this manipulation is becoming harder to maintain. The divergence between paper and physical gold prices is widening, a sign that the paper market is on the brink of collapse. While gold is often the centerpiece of discussions about monetary reset, silver plays an equally important role. Silver is not only a monetary metal, but also an industrial commodity used in a wide range of applications, from electronics to solar panels. Its dual role makes it particularly interesting in the current economic climate. The gold-to-silver ratio, which measures how many ounces of silver are needed to purchase 1 ounce of gold, currently hovers around 80-1, a historically high level that suggests silver is significantly undervalued. Silver's industrial demand is rising due to its use in green energy technologies, including solar panels and electric vehicles, EVs. Governments around the world are pushing for energy transitions, and silver is essential in this shift. However, global silver production is struggling to keep pace. Many of the world's largest silver mines are aging, and new discoveries are becoming increasingly rare. If demand continues to rise while supply remains constrained, silver prices could experience explosive growth in the coming years. Additionally, the monetary aspect of silver cannot be ignored. Throughout history, silver has been used as currency alongside gold. The US dollar itself was once backed by silver, and pre-1965 US coins contained real silver before the government switched to base metals. Countries like India and China have long histories of silver ownership, and demand in these regions is resurging. As inflation erodes the value of paper currency, silver's affordability compared to gold makes it an attractive option for ordinary investors looking to protect their wealth. The Federal Reserve's decision to raise interest rates in an attempt to combat inflation has had unintended consequences. While higher rates theoretically make the US dollar more attractive, they also make the cost of servicing debt unsustainable. The US government is now paying over $1 trillion per year in interest payments alone, a figure that will only rise as older bonds mature and need to be refinanced at higher rates. This debt spiral is unsustainable and will likely lead to either massive money printing, inflation, or a sovereign debt crisis. The bond markets have already begun to react. Foreign central banks, particularly those in BRICS nations, have been dumping US treasuries in favor of gold. This trend is concerning for the US because it means demand for treasuries, historically one of the safest assets in the world, is declining. If demand continues to drop, the Federal Reserve will be forced to intervene, either by buying treasuries itself, leading to inflation, or allowing interest rates to rise further, causing a recession. Either scenario is bullish for gold and silver. One potential outcome of the current economic crisis is the revaluation of gold as a means to stabilize the financial system. Some analysts, including Jim Rickards and Alasdair MacLeod, have suggested that the US government could reset the price of gold to $10,000 per ounce or higher in order to restore confidence in the monetary system. This is not unprecedented. Similar revaluations occurred in the past, such as Franklin D. Roosevelt's gold confiscation in 1933, where he raised the official price of gold from $20.67 to $35 per ounce. A modern revaluation could allow governments to devalue debt while maintaining purchasing power, effectively creating a new gold-backed system. The move towards gold-backed digital currencies is another possibility. Several BRICS nations have discussed using blockchain technology to facilitate gold-backed trade settlements, bypassing the US dollar. If such a system gains traction, it could drastically alter the global financial landscape. Investors who hold physical gold and silver will be the biggest beneficiaries of this shift. As we move into 2025 and beyond, the economic landscape will continue to evolve. The Western financial system is on borrowed time, propped up by unsustainable debt and monetary manipulation. Meanwhile, BRICS nations and other emerging economies are preparing for a post-dollar world, accumulating gold and diversifying away from US treasuries. The writing is on the wall, Yet most people remain unaware of the impending shift. For investors, the window of opportunity to buy gold and silver at current prices is closing. Once the broader public realizes what central banks already know, that fiat currencies are in their final stages of decline, the demand for precious metals will skyrocket. When that happens, those who prepared in advance will be protected, while those who ignored the warning signs will be left scrambling. The time to act is now. Gold and silver have stood the test of time, outlasting every fiat currency in history. The coming decade will prove once again why they are the ultimate form of money.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.